Hello everyone and welcome to Project Trade. This is the trading highlights show, all of the finest moments from our testing of trading strategies. Strategies which are usually based on one of the typical instructions of how the indicators creators advise those indicators to be used, or at the very least in a way which the indicators are commonly recommended to be used, even if not by the OG creator. In this one we're starting out now, we've got ourselves a divergence strategy based on the accumulation distribution indicator that we are going to test. We will be leveraging that divergence to try and find deep reversals, undoubtedly timing the bottom or top perfectly, getting in on that return action. Let's get started with the technical indicators we'll be using in this strategy. Firstly, as we've said, the accumulation distribution indicator, that is going to be absolutely core to us, but we'll also be using a 200 period exponential moving average to help us with a simple filtering process on the trades. Here's what those two indicators look like together on a typical price chart, just as you'd expect them to look if you're familiar with them. The EMA sitting there nicely on the chart, and the big dog accumulation indicator, that is the oscillator at the bottom there. Nothing on the settings to change for that one. If you've got the real volume, you can go ahead and give that a go. Otherwise, stick with the tick, stick with tick. We'll be using the indicators in conjunction to get into our trades as follows. Firstly, we'll be checking in with the EMA, and as this is reversals, we'll be looking for buy trades when price is below the moving average and looking for sell trades when price is above the moving average. It's putting our faith into a bit of mean reversion, and we'll also want price to be fully clear of the moving average on the current candle. If price for the day is touching the moving average even in the slightest way, then that will be it. We won't take it any further. If price is riding a 200 period moving average, that certainly strikes of potential uncertainty, not necessarily reversal city, unless of course your strategy is looking for the bounce off the moving average. That's a whole nother thing though. For now, we've got the accumulation distribution next up, which is where we'll be checking for that divergence. Bullish divergence will see us into a buy trade, and bearish divergence into a sell trade. And when we're looking for that divergence, we'll be aiming to find it in a range of between 5 and 60 candles back from the current one. Anything shorter or longer never feels quite as strong, so that's what we'll go with. 60 candles back, that's about 3 months worth of data on the daily time frame, so likely it's still going to be relevant from a macro perspective. Don't want to risk going any further than that though. So here's an example sell trade for us to look at with perfect hindsight. First off, we've got a peak in price up here, which similarly peaked on the accumulation distribution indicator in the same spot. But when we look a little bit further ahead to this second piece in price right there, we see that the accumulation distribution indicator is not so keen on the price move and has instead made a lower high in its reading, higher high in price, lower high on the indicator, divergence. So we can go ahead and get into a sell trade, and in our fantasy trade here, price does go on to drop a bit more, giving us a nice little winner. Bank. Next up, let's have a quick look at an example buy trade. We got this sharp dip in price over here, which stalls with that doji candle. We see the dip in the accumulation distribution reading too. It all happened very quickly. Yet, if we move a little further on where we see an even lower low in price, we glance down at the accumulation distribution indicator and it is pulling up at a lower high. Not convinced by that price move. So there's our divergence, down on price and up on the indicator. They are diverging from one another. So in we go for the trade. However, a few candles later, it does take a bit of another dip in price going against our entry. So we are a bit uncertain as to whether we're going to be taking any actual profits from the trades. Could just be losses. But that does lead us nicely into our money management section. This will give us all the answers on our profits and losses questions. So the first thing to mention is that if our entry signal comes on a reversal candle, we will double our risk as we've got an extra indication of a winning trade, a true reversal. Here's what we mean by reversal candles. You've got them both there, a bullish one and a bearish one. For the bullish reversal candle, price is opening and closing in the top half of the candle. Price originally pushed down but has come back up again nearer to where it started, indicating upward momentum. For the bearish reversal candle, price open and closed in the bottom half. Simple stuff. We'll keep an eye out for them on that double risk. Always nice for a bit more confirmation on the trade. The next thing to know, when we do get a trade signal, we'll be splitting our trade into 2 sub trades, so we're not all in on just one approach. Let's hedge our trades here, and it's 1% capital risk for each sub trade if we get the signal without a reversal candle, doubling that up to 2% risk for each sub trade if we do get the reversal candle. Big time 4% total risk on those trades. Hopefully we get some of them. That's how much we're risking. Now let's figure out where our actual take profit and stop loss levels are going to be. And to help us with that is the old reliable average true range indicator, 14 periods input. For those unfamiliar with it, the ATR is averaging out the price range for the day, so we've got a rough estimate at what the high to low price range typically could be for the day. Okay, so subtrade A will be a pretty basic 1 times ATR for both the stop loss and take profit. Quick and easy, just trying to snap up some wins with those ones. Then for subtrade B, that will have the stop loss at the same 1 times average true range level, but we'll shoot big on the take profit with 3 times the ATR value. Really pulling for that reversal to get us the profits. Ching ching, I'm sure. On the flip side, it will feel bad when we go for the reversal and both these sub trades get smashed out of the 1 times ATR level and we just watch that trend continue onwards. Those ones are going to hurt. Also, just to hedge us a bit on subtrade B, we'll keep a trailing stop loss in at 1 times ATR so that we do lock in a bit of profits along the way. That seems reasonable. Alright, so here's our sell trade we looked at for our entry signal example. There was the divergence and that was the entry candle, a reversal entry candle. So yes sir, we got the fun of doubled up risk. The white dotted line, that is our entry price. Now the red dotted line is our stop loss. That's 1 times the ATR back from the entry price. We don't hit that. Our take profit for subtrade A is that aqua line. Again, 1 times ATR. So yes, we're taking profit there, but there's not quite enough in the price move to get us to the 3 times ATR level. So sadly, we miss out on the full profit of subtrade B, but we are able to get a good chunk of money from the trailing stop loss still. Overall, pretty good trade, profits to be had. Now back to our buy trade example from previously. Again, there's the divergence we found between price and the AD, with that ring being the entry candle for us. It's a reversal candle here as well, so we're on double the risk for this trade also. Bullish divergence, bullish reversal candle. What more could we ask for? So our entry price is on the white dotted line. Then when we look at the red dotted line as the stop loss, 1 times ATR back from our entry price, you can see that we are in fact very safe, not going to be going for a loss. We do in fact manage to run through the 1 times ATR take profit level. And then on subtrade B, would you believe it, we are able to eventually take down the 3 times take profit level. So that is a big win for us, looking back at it and pretending that we really took it. Good stuff. That is how the take profit and stop loss is going to work. That is how much we're risking. We are essentially good to go on this strategy. Just a couple last bits. It is going to be on the daily time frame again for us in this strategy. It's the easiest one to manage and a lot of the time runs very smoothly. Not a 1 minute candle charter here, but respect to those that are. Always looks stimulating. Forex majors and minors is what we'll be trading on. Looking at some of the charts, we might not get the most signals out of this strategy, so at some point we may extend our trades to include some stocks as well. We'll cross that bridge when we come to it. Also, it's unlikely we'll worry about any correlation clashes unless there's a real large amount of signals for a particular reason. For example, if we get 2 to 3 trade signals all on the US dollar on the same day, we'll likely just get into all of them and go for it. See where that gets us if the signals actually come. We'll journal our trades as well, as we always do. Can't recommend it enough. Extremely helpful for when you're reviewing a strategy after you've finished testing it. And that's all we're going to need. So MetaTrader is the platform. Let's get into it and find some trades. Okay, so here we are on the charts. Got our exponential moving average there, 200 periods, and of course the accumulation distribution indicator. No settings for this one, as always, just tick volume. Never can get that real volume data, so we're fine with tick. Just got the Euro US dollar pair pulled up, and all we're going to do each night, come out around about this time, right at the end of the day, close the candle, see if we got any signals. Here we can see on the Euro US dollar, we know straight away that we're not going to get a signal because price not clear of the moving average. So we can immediately move on from that one. US dollar Japanese yen, this one's close to a signal. Price has just about closed up at a new high. Pretty tight compared to this one, but either way, the accumulation distribution indicator has moved with it. There's equally at a high, so that's what we'd expect to see from the indicator. So no divergence. Nothing on the dollar CAD, nothing on the pound US dollar. You can see price not really extended at the moment on many of these charts. Could be slow getting signals from these, because there is nothing on any of these 28 currency pairs tonight. And as I say, we'd like to see price on some of these closer to those higher highs. We can go back as close to 5 periods, but you would like to see the stronger levels really pushing up to a resistance level, say. So yeah, for now could be a slow week, but you never know, signals could pop up out of nowhere, which means there is nothing for us to do tonight. All we've got to do is wait for our signals and then take them. So we'll just come back around about the same time tomorrow. I'd like to do it within about the last hour or so and just go through those 28 charts every single day, see if any signal comes up. All right, back tomorrow then. Okay, here we are back for day 2. Just checking out these basic currency pairs. Euro USD, that took a drop. USD Japanese yen, been on the rise. Still, the AD is along with it. Can't do anything about that. Look at this though, already on day 2, US dollar, Canadian dollar, seeing some divergence here. Zoom in a little bit. Let's load up our average true range into it. Can I get a signal out of this? Surprising actually, didn't expect to see one on day 2, but amazing to see it come to fruition. Alright, let's give this one a go. You can see the risk on screen. That's what it is, not a reversal candle signal, so only 1% per sub trade. 0.20 standard loss. So you can see the signal, the high in price right there on that candle with the high on the AD. Doesn't translate, gets us the trade. Accumulation distribution indicator diverging. And let's get in with our subtrade B. There we go. Set the stop loss and take profit here. Just 679 points for each of them. That's 1 times ATR. And then on subtrade B, 3 times that amount on the take profit with just the same 1 times ADR stop loss. There we go. 2037. Trading stop loss in. There we go. Everything set and ready. Looking good. That take profit on subtrade B quite a way away. But really just pleased to be getting in there as soon as possible. That's the only signal for us tonight. You can see nothing else going on really. See what it brings us next. Alright, back tomorrow. Our US dollar Canadian trade is going a little bit good for us. Continued to push up, but it's turned into a reversal candle. Down it comes, just about $6 up on each of them at the moment. It is costing us on the swap as well. So hopefully we can hit the take profit soon. Still no new signals. There's a couple charts where price is at the lower low. So the Australian dollar, US dollar, New Zealand dollar, CAD. That's starting to get down further than before. But the AD has gone with it. Also at a lower low. So we can't get a signal out of them at the moment. The most promising one, I think, is the New Zealand dollar Swiss franc. If we see price take a big drop off, but the AD doesn't go too far down, it could get divergence compared to back here. From this candle across, if it drops to this sort of region. It might take a couple of days. Don't know if we'll get there, and it might be tight if we do. But we are pleased to be in the US dollar Canadian dollar trade. Let's come back tomorrow. Back again on day number 4, our US dollar Canadian dollar trade. Not looking great, it's continued to push up, maybe regretting not having a stop order in. If we'd waited on this one, would have been an even stronger divergence signal now. This is the problem with jumping straight into them. Don't get that extra confirmation that a stop trade might give. But there we go, we are going to see it out, and there's nothing popped up on these other charts. New Zealand dollar CAD, that's retreated from the lows. Same for the New Zealand dollar Swiss franc. So yeah, we're grinding it out, wait for those highs and lows in price, and then see if we can get divergence from them. We have got a higher low on the AD here, but I just need that price to drop. It might come soon, let's wait and see. Okay, here we are again, Friday, end of week 1. Bit of luck on the US dollar Canadian dollar, pushed down a lot, real weak day for the dollar, and thank goodness because it was going a bit shaky. Now we're up ever so slightly, so that is good. No new signals have appeared. As I said, I do think it's going to be very slow in that regard. Aussie US dollar could push to a low, but the AD is at a low. New Zealand dollar Swiss franc, that's pushed away from the low still. Aussie CAD, yeah, AD will be at low, so not a lot going on. Really could do with this US dollar Canadian dollar trade coming through, but that is the essence of it, at least to get us going. Hopefully we do find more signals as the week rolls on. Alright, we'll be back next week to trade again.